Welcome to the Deep Dive. Today, we're tearing into the Q3 2025 earnings call for Gorilla Technology Group. That's ticker GRRR.
Right.
And look, forget the last 3 months for a second. Our mission here is to really analyze a quarter that was, I think, less about the numbers and more about them laying out this, huge multi-billion-dollar vision for the future.
That is exactly it. This was a classic inflection point call.
Yeah.
The market reaction told you everything.
The enthusiasm was already there, wasn't it?
Oh, completely. The call was at 8:30 a.m. Eastern, and a press release had already sent the stock soaring, 13 to 18% in extended hours?
Mm-hmm.
So management's job wasn't to surprise anyone. Mm-hmm. It was to justify that excitement.
To prove they can actually turn this massive pipeline into real visible revenue.
Precisely.
Okay, so let's jump right into that results snapshot. Management called it their strongest quarter ever. What were the key numbers that set the stage for that bigger story?
Well, on the top line, revenue hit $26.5 million. Which, on its own was basically in line with consensus.
So no big surprise there.
No, but the real story is the growth. That's a massive 32% growth year over year. It shows they're landing bigger deals, and more importantly, they're executing on them faster.
Revenue growth is one thing, but, the big question is always, is it profitable growth? Or are they just burning cash to get these contracts signed?
And that is where we saw the major structural shift. This is the inflection point. Operating income. It actually swung to a positive
number.
A positive $0.4 million. And you have to think about the size of that turnaround. That's a swing of over $6 million compared to the $6 million loss they posted in the same quarter last year.
A $6 million swing. That's significant. And management made a point of this, didn't they? They called it proper profitability.
Yes, proper profitability, meaning this isn't some heavily adjusted, feel-good number. This is GAAP operating income.
Oh.
And even though the IFRS net loss was basically break-even, which is a huge improvement, the adjusted numbers were still really strong. Adjusted EBITDA grew 21% to $6.8 million. And adjusted net income just soared up 72% to $6.8 million.
So all the arrows are pointing up, but let's talk about the one small miss. The adjusted diluted EPS was $0.24, and consensus was looking for $0.26. It's only a 7 or 8% miss, but it's still a miss. Did they give any color on that?
They didn't really dwell on it, which tells you they saw it as, immaterial to the bigger picture.
A rounding error, basically.
Essentially, yeah. It was mostly technical stuff.
Yeah.
Non-cash stock comp, some foreign exchange fluctuations that can complicate IFRS reporting. At the end of the day, the market just completely ignored it and focused on that operating income swing. That's what proved the model works.
Right, and that structural change really brings us to the core of this, the financials and the strategy. Because the good news wasn't just on the P&L, it's on the balance sheet, which it looks like they're starting to use as a weapon.
They absolutely are. They have a substantial cash war chest. We're talking $121.4 million in total cash. And about $110 million of that is unrestricted.
Wow. And what about debt?
Very low. Only about $15 million. So that gives them a net cash position of over $106 million.
For a company this size, that kind of liquidity is a game changer. It gives them options.
It really does. Some of that cash came from an equity offering earlier in 2025, which, might have worried some people about dilution at the time.
I remember that.
But now management is framing it as essential. That capital raise lets them fund these huge national deployments without having to immediately go back to the market for more money. They can just execute.
A powerful buffer. Okay, but we do have to talk about the negative operating cash flow in Q3. Is that a real weakness or just a timing issue?
They're saying it's a timing issue, but it's one you have to watch very closely. They're still projecting to be positive or break even on operating cash flow for the full year. But that all hinges on them collecting about $36 million in accounts receivable, mostly from customers in Asia and the Middle East.
And these are government clients, right, who can be notoriously slow to pay.
That's the key question. If those payments get delayed by 6 months or a year, Gorilla has to carry that working capital. Management sounds confident. They say these are high-quality receivables, but it's a trade-off. You get these massive, stable sovereign contracts, but you also get long payment cycles. We'll have to watch the AR collections in Q4.
Let's pivot to the forward view then, because this is what the market was really buying. They held the 2025 outlook steady. Sure.
They did. On track for $100 to $110 million in revenue and $20 to $25 million in adjusted EBITDA. Solid.
But the real showstopper was 2026.
Oh, absolutely. The 2026 guidance, they're projecting revenue between $137 million and $200 million. And what really got people's attention, This is an acceleration in their growth rate.
You rarely see that.
Almost never. Especially when you're scaling past 100 million. It proves the new strategy is working. And along with that, margins are expected to be in that really attractive 15% to 25% range.
So this is where that big strategic pivot really comes into play. They're trying to rebrand the company, aren't they?
They're completely redefining their identity.
Yeah.
They're moving away from being a vendor that just does one-off projects. That's the old model.
So what's the new model?
They want to be a sovereign AI infrastructure operator.
Okay, break that down. What does that actually mean?
It means they're not just selling software. They are building deep, sticky, long-term national platforms for AI and security. Management called it a national nervous system. It's critical infrastructure.
Which sounds like it creates a pretty big barrier to entry for anywhere else.
A huge one. Their edge is that they offer the full stack. They design it, they build it, they operate it, they monetize it. And they guarantee sovereign control over the data. Plus, they mentioned a cost advantage, about 5 to 7% savings on data centers because of their partnerships with Intel and EdgeCore.
And the demand side confirms this is working. The pipeline is now over $7 billion.
$7 billion. It's a staggering number. It validates that sovereign focus. And that brings us to the centerpiece of it all, the $1.4 billion Freyr contract.
Okay, so this is the big one. An AI data center backbone across Southeast Asia. Phase 1 covers Indonesia, Malaysia, and Thailand. How much revenue does that first phase actually guarantee?
That first phase alone provides $100 million of annualized revenue, starting in 2026 and running through 2028. That's 3 years of high visibility, locked-in revenue.
Right, but management said it's not like flipping a light switch. For people listening who don't know data center deployments, how does that 100 million run rate actually ramp up?
It's a phased commissioning. Think of it like a huge construction project. They're bringing 6 to 8 megawatts of power online, but you can only turn on sections as the power and cooling are certified. So racks of GPUs from their NVIDIA partnership come online in waves.
And as those racks are powered on, they start selling capacity. That's the GPU as service model.
Exactly. They sell access to raw computing power, and revenue starts flowing. Then they layer their own high-margin services on top: video intelligence, big data analytics. The goal is to get utilization from, say, 30–40% initially, up to a steady 70–80% by late 2026. That's what locks in the $100 million a year.
Okay, and this is where it gets really interesting. Management said over and over that the 2026 guidance, that $137 to $200 million range, is highly conservative.
It's based only on what's already contracted.
Yeah.
Just the existing backlog and phase 1 of that Freyr deal.
So what major opportunities are being left out of that guidance?
Well, all the later, much larger phases of the Freyr contract, and any revenue from their other big MOUs like that one Amazon project in Latin America, plus a bunch of other late-stage government bids.
So they're deliberately under-promising, and then the CEO kind of dropped a bomb, sharing his own personal target.
It was a fascinating moment. He said his personal ambition is to hit approximately $500 million in annual revenue by 2027.
500 million.
Now, that's not formal guidance. But to even mention a number that's 2 or 3 times your official 2026 guide, it just shows the explosive scale they think is possible.
To get anywhere near that, they're going to need a lot more depth. So what's the plan for M&A?
It's a top priority. They're targeting 2 key markets. First is India, which they said is a $9.5 billion AI market that's expected to grow 10 times over. They're looking to buy local expertise there.
And the second market?
The United States. It's the biggest AI spender in the world, about 36 to 38% of the global total. An acquisition here would be about buying security clearances and credibility to win those massive U.S. government deals.
We mentioned their proprietary tech earlier, the quantum safe stuff. Why is that so important? It sounds niche.
It's the key that unlocks the door. It's because of the quantum safe part. Governments are terrified that future quantum computers will break today's encryption.
So this is future-proofing.
It's future-proofing a nation's most sensitive data. By offering that handshake now, GRRR gets access to the core nervous system, which then leads to these huge long-term contracts. It's a high-tech insurance policy.
It makes them mission critical. Okay, but we have to touch on the risks. They did flag a big FX loss, $5.4 million, and ongoing supply chain issues, right?
They did. Long lead times for high-end GPUs and memory are still a problem.
So how do they plan to navigate that?
Their response is basically just aggressive confidence. They argue that the upside from converting that $7 billion pipeline is so massive that it should completely overwhelm any of those near-term risks.
Which brings us to our next segment. This is the part of the deep dive designed to stretch your thinking.
And this is where we have to remind you, this is for entertainment and discussion purposes only. We are not financial advisors.
This is not financial advice. But, with this huge strategic shift, the $110 million in cash, the acceleration into 2026, the stock has already re-rated. The main risk now feels like execution delay, not a lack of demand.
So if the market is already pricing in the low end of that 2026 guide, how do you play for the massive optionality of the high end? Or even that $500 million CEO target?
The outrageous but plausible trade idea is a decoupling story. GRR is uniquely focused on these high-barrier sovereign deals. So the trade is long GRRR, short a basket of small-cap, non-sovereign-focused infrastructure ETFs.
Interesting. So you're betting that Gorilla's unique strategy and that huge cash pile will let it pull away from its peers. You're capturing the upside from their specific pipeline conversion while hedging against, say, general market volatility or interest rate risk that hits the whole sector.
Exactly. It's a bet on strategic specialization winning out. That cash war chest gives them a cushion that very few other small caps have.
So to summarize this whole deep dive, the main takeaway is pretty clear. Gorilla is turning a massive pipeline into visible, accelerating revenue, and they have the cash to back it up. They're successfully transforming into this scalable, sovereign AI platform.
And here's the final thought to leave you with. The market is still trying to value this company based on its past. What happens to that valuation when the other multi-billion-dollar contracts in that $7 billion pipeline start to convert and the CEO's personal $500 million target for 2027 becomes official guidance?
That optionality is what defines this stock right now.
Thank you for joining us on this deep dive. We hope you feel thoroughly informed on the nuances of this evolving national AI infrastructure space.